Hey there, everyone. Welcome to this week's edition of Bulls versus Bears. A very exhausted, well, me and Mark Gardner and Kai Chen. JT couldn't be with us this week. He's moving into a fresh mansion. With tin-lined walls and really getting into his conspiracy theories. He really loved that, and that week. He's really gone down the rabbit hole in a few things. I'm a bit concerned about him, but we've given him some leave. Kai Chen, welcome, my friend.
Good to be
here. So I thought I'd take the opportunity while Tinfoil Hat Boy's away, and while and given the Philadelphia SOX index or the Semiconductors index is just absolutely ludicrously powering on.
Yes.
So we're EP119 GPUs, CPUs, TPUs rocket higher on IOUs, and we're going to talk about the bit of the circular financing, vendor financing that's going on amongst them, and no better person to understand that than you, mate. So yeah,
I do understand a lot about the chips, but the circular deals, I'm actually not too sure how they're doing it, right? So from my base understanding, it's basically so the OpenAI has deals with Nvidia to use the chips. How does it work? The circle.
Well, with
the
this new podcast platform we've got, it's very difficult for me to just flick to the slides. They're further down the line, so we'll try and stick to the order but basically, they give them to someone basically on tick effectively, and then essentially the revenue they generate from them pays them off. So vendor financing, sort of, I suppose.
Yeah.
But it's all like there's loads of deals going on and loads of backlogs and loads they're pricing demand. It's complicated, and when you see a couple of these diagrams, you'll understand why. But as you can see, left hand side there, Nvidia up 13.5. That's a little bit on the back of China being able to take those H200 chips. Micron, the big blue circle there, that's just up another 20% this week. We actually trimmed some Micron this week because SanDisk is, which I don't know where that square is particularly, but which is spun off Western Digital. It essentially got a very unique accolade this week for the technical analysis boffins out there. It got to a RSI of 99, which no one can actually find. That a stock that's ever got to a weekly RSI of 99. I believe it's up something in the vicinity of 4,000 or 5,000% in the last 12 months.
So it's almost it's almost crypto territory, isn't it?
I actually think it makes crypto look like it's a wuss. But the ones that we like, we're very happy with. I mean, we've had Micron on. Don't get me wrong, but the old if you go in the middle there, you can see just under Netflix is the Palo Alto, and then CrowdStrike's there somewhere as well. They are on fire. So we did that software survivors strategy. I think it was like early March thereabouts. And then we kind of had to, unfortunately, we had to kind of cancel the half of it because the war kicked off, or we had to back it off a little bit. But that strategy is up is up like 243% as of entry this morning, that pair. And the stocks are up about 51. The worst one's up 51%. I think one of them's up 60%. So we haven't had that on for very long. The other two pairs are not, I mean, they're going okay, but they're not going great. They're sort of somewhere between recouping capital back and zero. But that's the thing with those worst of strategies is that, you get one good winner, it pays for a heap of them. So, and Tesla, I've got us interestingly, which is the, bottom, down the bottom there, it's kind of been treated like a chip stock lately because of that terafab thing. And the deals they're doing with Intel and stuff. So it's been rallying and falling with the SOX. the semiconductor index. So, which is a weird price action because I obviously do the morning report every day, and Tesla kind of just normally does its own thing, but it's been going up and down with the semis. So, a bit of a weird one, but and we're in Cerebras IPO this week, the huge IPO, and they do inference chips, and that was another reason why I wanted to pick your brain about this. So I can't remember the exact stats, but basically the high end of their IPO was going to be 165. They actually ended up making it was 30 times oversubscribed. And then they set the IPO price at 185, and then it was up 68% for the first day. So that the Americans know how to do IPOs. That is for sure. So it was up 200% at one stage during the day. But Aussie market, CBA belted, CSL also belted. Would not be much fun being an index trader at the moment, because it'd be very hard to balance. But yeah, the bank's being hit on the back of the budget, basically. So we're going to try and avoid the budget, because I'm totally sick of the budget right now. So, but this is one that it's one of these occasions where you put something out on social media and on Ausbiz, and you fortunately get it right. There's lots of people come at me on Twitter all the time going, "How about when you said platinum was going here or whatever?" But this one was actually right. September 2024, we said sell the banks and buy resources, and it was the largest divergence. It was pretty much, well, I mean, the maroon line on this one then actually becomes the blue line on this one. I should have probably fixed it up, but there has been a 52% reversal since that time. It was about 18 months ago. And you can as you can see, you can kind of see it in our index now. How we were whinging about the banks being too high, and then but now the momentum's tipped the other way, and it kind of it'd be good to have JT here for this one, but it kind of proves his mindless green robot argument. So where the biggest weightings with a bit of momentum kind of win, and the other ones don't. So it's kind of one of those annoying market conditions that will continue to happen because there's not too many mid cap or large cap fund managers left in Australia. They're just all blindly in ETFs. So, but yeah, no, and we probably will now see the likes of those resource stocks go on forever. But yeah, so Kai, you joined JT last week in the bear ranks. Do you want to just read out what is it's 1.38% up on the day? Sorry, on the week. Yes.
Which one am I looking at? Were we talking about the ASX 200, or were we talking about?
We're not talking about the ASX, my friend.
I don't know.
Oh dear. So I've managed to. You had a runaway lead, and then JT tried to gamify it, and loser. But no. So I've managed to gain a little bit of ground now. I've gone from stone cold motherless last with one of the worst. I think I got one in the first 6 weeks to coming home with a wet sail. So, but as you can see, we're talking 1%ers here. Like, it was not like last week where it was off the hook, but everyone was a bit.
The Aussie US spreads, it's back to normal. It's
the Widowmaker. The Widowmaker's back.
It's back.
Yeah, it was never ever going to last for very long. Commodities, we get some of our old friends here, silver and copper. And silver gave back 5%, but
this afternoon,
copper, copper's going great guns. If BHP was a proper US listed company, it'd probably be through $100 by now. But the old plotter of the ASX, unfortunately, we're still only at 63. But as you can see, it's been a tame week in the scheme of things, right? I mean, we everyone's been focused on the budget, which has been nightmarish. But like really, I mean, we had CPI, PPI, they were high, but no one seemed to care. Like it's kind of, I don't know. It's been in the scheme of things, it's been a pretty boring week. I really. What are your thoughts?
It's probably interesting to talk about the gold and silver ratio because and what really happened there on I think it was Monday when it had that spike because there was I saw some Twitter post that we looked at and it was like the Chinese are buying silver, wasn't it, that caused that
Yeah, it's a
move?
record monthly purchase of silver. Apparently, the Russians as well, same
Right.
deal. So that's very BRICS, maybe. I mean, if I'm
What
going to be,
what are they? The gold's too expensive. They're turning to silver now.
mate. I mean, look, maybe they've been listening to my morning podcast.
Yeah. Putin's like, he's right.
Oh yeah, and I'm pretty sure that Z does not watch Bulls versus Bears, but or maybe we came on their radar because something was right in the conspiracy theory episode. Who knows? But yeah, but I mean, look, it was good to see them bounce back a bit. I mean, silver was nearly at $90, and it
really. And it just gave it back all this afternoon. I was trying to find a reason why it was happening this afternoon, but I think it was they were saying that apparently they're going to start a bit of tensions in the Middle East again, so it's kind of going back to the Middle East story.
Yeah, but they
again.
normally buy gold, not silver, on that, right? Like it's a bit. Holy crap! I didn't see. It's down 8% today.
Yeah, no, I know. It's in the afternoon. It's gone. It's gone. Yeah.
Oh wow! So we were at 90, and now we're at 78.
Yeah.
So sorry, and look, it's 4:15 here at the moment, Sydney time. So I hadn't seen that move. I've unfortunately been relegated to the realms of doing content duty this week and discussing the budget and engaging in the exhausting task of having to reply to inane social media comments for and things. But it's been a pretty emotive topic, let's say. You know, it's, I mean, that slides. I mean, that's a good one for context, obviously. This is from last week, but I probably did mean to. This is how tired we are. I did mean to delete that, but that gives you an idea of the Philadelphia Semiconductor Index. I don't know how I got the names. I mean, I kind of get where SOX. Yeah, but you know, they like to have their catchy names. But like that's from last, so like legit. That's another 15% in the last probably week or so. It had one minor pullback, and they just got bought the crap out of. There's rumors that that these 3 times ETFs that are in the States. You know, there's a bunch of the stocks and ETFs have got.
That's
like,
right. Yeah, they've got like Tesla 3 times ETFs and all that stuff.
Well, there's a 3 times ETF on the stocks, and apparently, conspiracy theory is they're using the algo guys are ambushing them to go in and like squeeze the ETF providers basically, so they'll come in and like scoop it and then start scooping the actual stocks, trying to catch the ETFs off the market makers off guard a little bit. And they're doing it on a number of stocks, which is causing these. But like, you know, it remember, you know,
I can confirm that it's not a.
What's that?
Yeah. I can confirm that's not a conspiracy because it happens in flow. You know, when you're trading in the market, you see a lot of things, right? Like in the short time, the market can move in very irrational ways, and you know, if you're a large size participant, you can put like obviously,
and you're a microsecond faster. All of a sudden, you know, you can catch the guy off guard. So, but I mean, we used to just talk about whether a company's good or not. I mean. The world has changed, my friend. But yeah, so I'm gonna now hand it over basically to you. So like with this SOX thing. So for people who don't know how to build computers, this is kind of this is the layman's language, and I'm kind of gonna let you take over here. and just for context, because you haven't seen the slides yet, we've obviously got the major players here as the second slide, just so you know what's going on. But run everyone through,
Where should we start?
What the different.
Because
go in order if you like. I don't mind.
yeah, because I've had a bit of play around with both building like PCs, laptops, up to server grade computers, right? So it's really, really interesting, like to see the different components. I mean, obviously the core traditional units is CPU and memory. So CPU, what it does is think of it as the brain, the main brain, right? But it doesn't have a lot of memory, right? It's really, really quick. It does all the operations. So basically how computers work is it works in bits, right? So at the transistor level, all these things are doing is it's going on off, right? So this is what all the semiconductors are doing. Basically, it's sending electrical signals through. You're going through lots and lots of on and off switch. It creates bytes, so it translates it into 0 1s, and that's how everything runs, right? So and in terms of coding, the base level is called assembly language, right? So what assembly language does is actually it translates any code, and there's many different coding languages, into machine language, which is in zeros and ones. So it's called bits, right? So basically, assembly language
Or binary.
so it converses with the CPU, and then it does all the processing. And then memory, the thing is, it doesn't have a lot of memory, right? You have a cache in the CPU, which allows it to buffer some memory and go, okay, I remember little bits and pieces of what it's doing. But really, most of the memory is actually stored in the RAM. So, as we know, for anyone who's used a computer, RAM, and the more RAM you have, the more you're able to store.
The random access memory from my computer studies classes in 1994. This was, but realistically, back in 1994, all you had was the CPU and the memory.
Correct.
TPUs and GPUs didn't exist because you didn't have graphics and you didn't have and to be honest, everything was on a floppy disk. For the kids out there who are below the age of 30, so a floppy disk was an actual physical disk. It was kind of like a USB, but everything ran on it, and your computer literally couldn't run without it. But then obviously these are more modern things. There's CPUs and TPUs, right?
Well, I mean, GPU was in its baby form, wasn't it? Well, Jensen was probably still working at Denny's at that point, wasn't he?
Yeah, probably. Yeah, exactly. I mean, a Windows computer didn't come out till like the mid 90s, so that's when GPUs, I assume, and I would imagine Apple would have come up with them, but I don't know.
No, actually, Nvidia was very early on in. Right. So basically, Nvidia was, very early on in the GPU scene. They were known for something else, actually. Like basically, and GPUs back in the days were used for gaming, right? And
graphical processing unit.
Yes, so it's stands for graphical processing unit, and basically, like compared to the CPU, right? The GPU can do a lot more parallel calculations. It's a lot, the use case is obviously to render images, and
so it can juggle a lot more balls. Would you say?
Yeah, absolutely. So it can do a lot more.
So to do a really sexist analogy here, the CPU, so the CPU is more like a bloke. It's very good at one task, and the GPU is more like a woman who's very good at multitasking. Would that be fair?
Pretty.
You don't want to weigh into that. I'm going to get hate mail for that one. Yeah. Anyway, go on.
But yeah, I mean, like, and Jensen admitted this and was like, mate. But basically, they stumbled upon the gold, right? Because, 20 years ago, that GPUs would have been used for AI, but it just so happens, basically, with machine learning, going one step back from language models, the whole thing's based off machine learning. Google created TensorFlow, and Tensor actually works really, really efficiently on GPUs, right? So and this is why GPUs became a big thing. So they were a lot more efficient in processing these machine learning algorithms. LLM, large language models, is a type of machine learning algorithm.
Yeah.
And that's basically, so for GPUs, we're talking about video RAM, VRAM. So it's like basically the video RAM, right? So there's this whole thread to go down on. But at the end of the day, to simplify it, GPUs can do a lot better AI calculations than CPUs. But one difference to mention is actually Apple. So that's why everyone buys Mac, right? Because Mac is a unified CPU and RAM capability, and that's why they actually have a lot of memory. It can do processing very efficiently, and that's
So
why the
there's
Mac's
sort of
actually
similar problem, just from a slightly different angle.
Yeah, exactly. Well, like again, I don't know if Jobs stumbled upon this way of working through it, but yeah, like that's for Apple. That's why they're actually really good at processing these
Yeah,
LLMs.
okay. I mean, look, I mean, and these are the major players, and obviously some of them cross both, right? Like, Apple was CPU, and CPU
CPU,
and TPU and AI thing, but then like Intel's only CPU, AMD's CPU and GPU, Nvidia's mainly GPU, but they're going into CPUs. Google doesn't try to make their own GPUs, but they're very good at the TPU.
So the TPU is called the tensor processing unit. So this is what I was talking about before. So like all machine learning, basically the software that's behind it, or it's like a library in Python, right? So basically, they have a library that uses this thing called TensorFlow, and this trains all the machine learning models, does all the inferencing stuff
And
like
it's
that.
super specific TPU, right? Like, so it's kind of like assigning someone a specific job to do, whereas GPU can do all the jobs, right?
Yes.
But GPUs,
Yes.
but GPU's insanely more expensive than TPU.
Correct. So it's like an
Yeah,
optimize.
right.
It just needs to do it just needs to do the machine learning algorithm. It's optimized for tensor processing. So that's all it is.
Or they call them inference chips, right? As well. Is that another word for
Yeah.
them, or?
No, inference is a little bit different because this might go down a bit too long of a rabbit hole, but it's like you've got the different process and stages of training the AI model. So obviously, like you've got pre-training, post-training. That's the training aspect of it, and you need a lot of GPUs to actually basically let the model learn and train it on the data. The inference is because once you've got the model, like say the Claude model, it has 600 billion parameters or whatever it is, right? It's actually all it is. It's a set of weights. It's remembered. It's learned all the things and it's memorized it in this model.
Okay.
So what the inference chip does is it reads off that model, whatever prompt you put it in, and then takes this whole thing and gives you something spit out, right? So it's actually not changing.
Because when we use Claude here for work, like you get these token burns, right? Like, so, and this is kind of, I know about this because I burn about, well, me and Kai burn about 90% of our tokens here at MPC. But I worked out we're using it really inefficiently, where if I set up a skill and then that skill became wired, and then because you're doing every time you do a task, right, you're like, there's certain processes that you use over and over again in different tasks, so you can make them a skill, and then if you use that skill within it, then you're burning less tokens because it's just following the same instructions over and over again instead of trying to reinvent the task brand new every time. And I was hearing that Meta in the States is giving people official warnings and firing people for not that's what they're, instead of using hours, they're using tokens to so they're going, you're a developer, you only use 2,000 tokens this week, you're supposed to use 10,000. What the hell's going on? You're not doing your job properly, or you're taking the piss and you're not at work. So they've fired people for it. So like it kind of will be, maybe things become a bit more of a meritocracy. If you get all your work done at the start of the week, well, you've hit your 10,000, take a couple of days off. So I mean, it could, who knows, it could be good. And then obviously my memory as well. These three companies, I mean, SK Hynix, Micron, Sand, they've been on fire. So so here we are at the circular. So there's a whole article around this, but basically, and it's very look. This is not an easy thing to explain, but essentially for every the light blue arrows are investments, and so they'll invest in. Say you go to Nvidia. Well, Nvidia. What are they doing here? Well, let's go to CoreWeave, for instance. Like, so the light blue line they invest, and then the dark blue line they provide services, and then hardware, software, and then obviously payments come back the other way. So it and then basically CoreWeave essentially is a business built around the fact that there was a shortage of Nvidia chips. So they said, well, they pre-bought them, rolling the dice, going, well, then we'll rent them out for higher price because of scarcity. So, and you can kind of just say, like, even it's simple with XAI, it's the Nvidia's provided venture capital to XAI, and then they've paid for services and hardware or software back to money going back to Nvidia. So you can kind of see how incestuous it is, right? Like, I mean, there's a lot of lines going on there. And essentially, this what is making up like 40% of the US GDP is, well, and this is kind of this was around 6 months ago, because Nvidia is now $6 trillion. Just up a lazy 1.5 trillion. But like it's all amongst the same companies, right? So, but we are starting to see, when the data centers, like there's a one I did on the call this week, SRH. It's like a cement company. They do concrete, but they're near all of the data center places in the US, and they're just selling absolute crap tons of concrete because they've got to have thick concrete walls to keep them cold and blah blah blah. Like, but it's kind of now it's only just starting to filter out into the real world, not just the AI world. So, but in the initial part, like the reason that these things can effectively grow, like because a lot of these light blue lines and the pink lines coming back aren't money, they're promises. So, like, and then they're marking them. There's been a big criticism of Nvidia that they are depreciating stuff over a 5-year time frame when their chips realistically will be in obsolescence after 3, and that it actually inflates their income and things like that. So that I'm not a forensic tax accountant. But there is a lot of these like I said, a lot of these lines are announcements and promises, not necessarily, and backlog. They're not necessarily actual money moving, but they count them in the earnings. So that's where the concerns are. I mean, look, if it all plays out, brilliant. Like that's, but I don't know. It's just kind of generally, how often does things pan out exactly as the diagram goes? Like hardly ever.
Well, like I mean, without going into it too technically, but it just sounds like in terms of accounting process, like cash versus accrual, right? Like,
there's a lot,
basically
and a lot of it's accrual, and there's not a lot of cash floating. So, and then obviously swapping for an equity investment as well. So, which like I said, they're numbers and things like that. And I'm but look, that's where people they get concerned. And like I said, and I'm not trying to burst the bubble here or whatever. There's no but there's it does get to a point where Nvidia at $6 trillion is close to the largest company in relation to GDP in the history of the world. There's only, it kind of gets to a point where there's only, how can Nvidia grow at 80% a year? Like, I mean, that means that it'll be worth all the money in the world.
It will become
in 4 years' time.
The world will become TPUs.
Well, but I mean, they're genuine. There is supposed to be. Central banks don't really subscribe to it these days, but there's only supposed to be an X amount of money in the world. Like there's M2 money supply, But I mean, you're the maths guy. Like 80% growth, 80% growth over 5
It's a
years.
it's a Clippy problem. It's Nvidia is turning the whole world into GPUs.
Yeah, exactly. It's like it's a nightmare. So, but I'm going to actually do the maths on that. I should have asked beforehand, but but the oh god, yeah, sorry. And I'm going to go back to the other slide because this is more interesting than the budget. And we can kind of finish the topic off. But so what are we going to go? 80% compounded annual growth rate over 5 years on 6 trillion.
Oh god.
Oh
That's
dear,
ridiculous.
so apologies. We're not very prepared. We've had an enormous week here at MPC,
Let me
and
guess. I'm
yeah,
going to guess 60. Is it 60 trillion? 60 trillion?
it's only over 5 years, and it's
Yes.
at 80% CAGR for 5 years. So
Yeah.
yeah, so basically we're talking 114 trillion.
Oh wow, that's
Um,
even more.
so, yeah,
Jesus.
so yeah, exactly. So
And
how much money?
that's the thing, right? Like I think it's so hard for humans to grasp like compounding and exponential growth, like because everyone thinks in a linear fashion. It's like if you
Yeah.
have like 80% compounded, it becomes staggering,
Mm.
like crazy.
But yeah, I mean, you do at 6 trillion, you do kind of run, and the global GDP being only X amount, you kind of started to run into, availability of actual money some stage, but because there's been a lot of people to talk about how the maths doesn't work, like they basically every consumer in the world would have to spend X amount of dollars to make this possible, and la 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 la. But they're also not taking into account efficiencies either. If it does increase productivity, then we're good. But and I heard an interesting thing actually. The telco companies in the US, which have massive call centers, are some of the most effective AI users. They're saying the mistake that people are going down the road of at the moment is trying to get AI to do an entire task. So the way that all of these massive companies have actually set it up is that it listens in on the phone call that person has with the human being, the service agent, and then it actually keeps throwing up information on the screen to the service agent, like the actual human service agent, to help them assist the client, and that's how they've increased efficiency. So they're not trying to like get AI to answer a phone. Apparently, there's this swathe of businesses in the US all adopting AI answering services, and apparently they're infuriating and hardly any of them work. And it's like they want to ban them and all this sort of stuff. Like people are losing their minds online. Like they're going, because apparently they don't actually work, and then people set them up wrong as well. But yeah, so onto the budget very quickly. Only because this is way too complex. I'm way too tired talking
I
about
think
it. I wrote an article earlier in the week, and it just like it's different for everyone is the major issue. So explaining it for one is the other, but like you take the main points. But if you want to read my article, you scan the code.
Yeah, I mean, really, like, the big three is basically like you've got capital gain changes, negative gearing, as well as trust. In capital gain situation, they're taking away the 50% CGT tax discount on the gains. It'll be index cost base, inflation against inflation. So I won't go into the exact detailed calculation, but let's just say over 2 years, inflation's at 5%, over 2 years is 10%. If you bought a $1 million property, you gain $100,000. And you sold it for 1.2. Based on the cost, it goes up by, it should be 1.1 inflation adjusted. You made $100,000 capital gain. Basically, you're taxed on that.
Yeah.
Yeah. So So it's like it's just a bit more complex to calculate. Whether it's more favorable or I mean, like in the longer run, it should be actually more favorable in a lot of cases. But I think negative gearing on residential is obviously a big one, right? So there's a lot of property investors who have negatively geared properties, which means that you're paying more mortgage. To put it really simply, it's like you're paying out
Basically,
more
you're
mortgage.
losing money on your property, but you're
Yeah.
getting, yeah.
And then but I was speaking to a property friend of mine, and he was saying, yeah, like that happens, but when you sell it, you still accumulate all the losses, so it comes out in the end. But I think it really affects the cash flow of the property. So like
Yeah,
um, yeah,
category. Yeah, no, it absolutely does. Like, and I mean, look, I approach it from the angle of, look, we can't. I'm not going to whinge about it. I'm not going to get involved in the politics of it.
mm,
And my article was kind of around like this tax policy, and look, taking it away is always hard, right? Because that affects people and they've made plans and stuff like that. And I feel for them. And like I said, I'm agnostic on the, but it's like, but what I've seen a lot of clients and a lot of portfolio reviews over the years where if they just like Westpac, ANZ and NAB are perfect examples. You would basically, if you just sold them and paid your capital gains tax 10, 15 years ago and bought Macquarie and CBA, you would be insanely better off, like probably double the amount of money. But people cling on to them going, oh, I don't want to pay this. And it's like, and there would be a lot of people out there who didn't sell their CSL because they didn't want to pay capital gains tax. Like, and now CSL's at $98 and you could have sold it at 310. And we had a lot of people where we traded the range in CSL and made up some ground. And there were some people that refused to do that because they were worried about capital gains. And it's like, at the end of the day, like the game is to make money investing. It's not to avoid tax. And it does. And I'm not saying you shouldn't take it into account. I'm just merely saying it shouldn't be your categorical top priority. It should be investment first, and then you obviously have to. But the end point of the article is go and see an accountant, go and get your portfolio reviewed and stuff like that, because now there's a lot of old school positions that that people have just not had to consider looking at for years. That now they have to, and look, if you may as well, if you're going to go and have to look at it anyway, you may as well get the whole lot done, and just look at the world through a new lens. Like, there's some people that have had CBA since 1983 or whatever it is. Like, I mean, ETFs didn't exist then. There's like new products on the market, like the stuff that we do in the structured products, and there's private credit. Like, there's other things out there, and if you've just been clinging on to the same portfolio forever, and you might realize that. Your ANZ and you how much money you potentially left on the table by holding those stocks because they've been yielding horribly forever. So, and they haven't been going up. But I mean, so I think it just, like I said, you can't whinge about it. So you're just kind of going to be positive about it and just use it as a way to reset and move on. And from there, and that's not like, I don't think people review this stuff enough, to be honest. So, and I'm not saying that from a stockbroking point of view. Like, I don't review my own stuff enough. Like, so yeah, that the main point is review. And I'm going to shut up now.
Yeah.
But sorry.
I think the biggest one is actually the trust, the trust changes, right? Because it means a lot of companies and families, or a lot of entity structures, they have to restructure to be more tax efficient.
Accountants are going to make a fortune this year.
Yeah, but it's also a headache. It's a headache for a lot a
Some of them are 100-year-old. We've seen ones that are on typewriter when they come in. Like,
gosh.
One of them's like 1968 or something. And we've got a trust deed that's like literally done on a typewriter, and that's a huge unwind. But yeah, so apologies for the low energy today, guys. We're like I said, we're both a little bit fried. So fried, in fact, that I gave you a tick when you actually deserved a cross, Kai Chen, because you were bearish. No, there's no free point there. I didn't. That's a mistake. So you blokes were both bearish last week, and I was bullish. It feels a little bit upside down world. And we were 68 greed. So I'm gonna stick to my guns, and I'm gonna remain bullish. Only because I think we need to. We don't seem to turn around until we go into extreme greed. I will preface that with I am the world's most nervous bull. I don't like you probably. I only pick bullish out of this silly game that we play every week. I'd be in. There's no. It's not bulls versus cash versus bears. It's bulls versus bears. So I'm going to go bullish, and JT's gone bearish. And you've gone bearish as well, Kai. What's your reasoning there?
Oh, like I'm just looking at today, right? Like I'm thinking about the following momentum. It seems like the market's a little bit weak at the moment, and there's probably some whimperers of Iran stuff. I'm not sure if that'll pick up again. I think I think the market's had a bit of a rest and recovery in terms of from all the Iran news. If something new comes out, I don't know. I feel like the market's kind of had a break from had its relief rally. It's looking for an excuse to kind of go down. So that's my market feel.
Categorically, like I said, for me, in a heartbeat, I'd be, you'd be turning it around. I'm nervous here, but it just kind of, I don't know. We've done 119 episodes of this thing. And it always just seems to go that 1 or 2 extra weeks where it just, and I'm like I said,
but can I be a bear and a bull? Can I be a bull on the stocks? The memory.
No. Well, we can't really introduce a bonus point system when JT's not here. Although it'd actually be pretty funny to see him blow up next week when we award you a bonus point. But but look, I mean, we've struggled through this. Apologies again for the low energy people, but it's been one of those weeks. I hope everyone has a great weekend. And Kai, thank you very much, and we'll speak again next week.
Thanks, everyone.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Market's platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.